Disclaimer: the following content is for educational and informational purposes only. It should not be considered financial advice. You should consult with a professional to determine what may be best for your individual needs. Investing in stocks involves risk, including the loss of principal. Section 1. The unseen backbone of our future. Grids, renewables, and opportunity. The world is plugging in like never before. From the data centers that power our digital lives to the electric vehicles filling our driveways, the demand for electricity is growing relentlessly, straining aging infrastructure that delivers power to homes and businesses. A global shift to clean energy is changing how power is generated. More solar, more wind, essential, but intermittent. This variability makes the grid harder to manage. Stability matters. Utilities and governments must make grids stronger, smarter, and more resilient. A multi-decade project requiring trillions. Companies that ensure grid stability, power quality, and renewable integration are positioned to benefit. This is where AMSC enters the conversation. Reliable power underpins economic security and public safety. Outages carry massive costs. Section 2. Introducing AMSC. At the heart of this evolving landscape is American Superconductor Corporation, ticker AMSC, a company solving core technical challenges in modern power systems, operating through two segments, grid tech and wind tech. They target grid modernization and wind power expansion, creating multiple growth avenues. Grid tech focuses on the power grid, boosting reliability, efficiency, stability. Products include power electronics that manage flow, improve power quality, and protect against disturbances. A key expertise: superconducting technologies, high-capacity cables transmitting massive power with minimal loss. Solutions target utilities and industrial users, upgrading infrastructure and integrating new energy sources. Wind tech serves the wind market. AMSC does not build turbines. It supplies the brains behind them. Designs and licenses advanced electrical control systems, the central nervous system of a modern turbine. They optimize performance, maximize energy capture, and ensure safe, long lifespans. AMSC positions for both grid operators and wind developers, not just one or the other. The strategy recognizes the link. A modern grid needs integrated wind, and wind needs a stable grid. AMSC aims to be the technological bridge, synchronizing systems and diversifying the business model. Reliable power now underpins economic security and public safety. Recent failures show the cost of instability. The stage is set for a new era of innovation and investment in the power sector. Section 3. A data-driven look at AMSC. The purpose is a clear, objective analysis, beyond the company story, using public data. Is recent interest a sustainable turnaround and buying opportunity, or a bull trap? To answer, look at the numbers and the long-term context. Avoid speculation. Focus on evidence. We will rely on stockanalysis.com and macrotrends.net. Stock analysis. Recent financials. Quarterly revenue, profitability trends, key ratios. AMSC has shown a shift from losses toward profitability. Sometimes non-GAAP, sometimes GAAP, a critical inflection. Examine revenue trends, 8 recent quarters, and year-over-year comparisons revealing growth. Higher revenue versus prior year suggests rising demand and sales traction. Top-line growth is pushing toward sustainable profitability. Profitability generates cash, reducing reliance on debt or equity, and signals operational efficiency and pricing power. It is not just more sales. It is sales at margins that cover costs and leave a surplus. AMSC is small. Results can be lumpy. A single project can swing quarters. Look for consistency across several quarters. The data suggests the tide may be turning, but execution must continue to prove permanence. Price to earnings. How much investors pay per dollar of earnings. High or not meaningful when emerging into profit. Watch gross margin over several quarters. Improving margin implies better pricing, efficiency, or higher value mix. Debt to equity indicates risk. Lower leverage offers flexibility. Check cash and cash equivalents as a vital cushion. Keeping an eye on PE, margins, debt to equity, and cash versus burn gives a clearer picture of where the company stands. Understanding present valuation requires looking at the past. Macro trends provides multi-decade context. Identify major support and resistance levels, market memory zones where supply and demand flipped. AMSC's long-term chart shows significant rallies and deep declines, typical of emerging tech. Draw across prior peaks and troughs to delineate zones. Past highs often act as future resistance. A buy zone is an area, not a point, near durable support or after a meaningful retracement of a sharp run. Long-term moving averages, e.g. 200-week, often align with attractive risk-reward areas. Potential sell zones cluster near historical resistance, especially if rallies occur on weakening volume or overbought signals. At resistance, consider profit-taking or tighter stops. At support, define entries with clear invalidation. The long-term chart provides a roadmap of buyer-seller battlegrounds, essential for discipline. Contextualize recent movements against historical ranges to assess risk versus reward at current prices. Analysis is a mosaic. Industry trend, company role, recent performance, long-term valuation, catalysts, and risks. No financial advice, purely educational, presenting data so you can start your own research. We now turn to what could move the needle and what could get in the way. One major catalyst: backlog growth. Orders received but not yet recognized. New large grid tech or wind tech orders signal market acceptance and future revenue. Government infrastructure spending can trigger waves of grid investment, US, Europe, Asia. As grants and incentives flow to utilities, procurement for AMSC-type tech can accelerate. Performance or cost breakthroughs in superconductors could open new markets. A high-profile REGI contract in a major metro would validate commercial viability. Partnerships or JVs with industrial giants or utilities can expand channels, scale manufacturing, and boost credibility. Risks: intense competition from major industrials and specialized firms, Siemens, ABB, General Electric. Advanced products rely on superconducting wire and power electronics from limited suppliers. Disruptions raise costs and delay delivery. As a smaller, newly profitable company, future capital raises, equity or convertibles, could dilute owners. Winning contracts is step one: deliver, install, and support complex systems on time and on budget. Long timelines, many stakeholders, harsh conditions, delays, overruns, or technical failures can bring penalties. Consistent, flawless execution on backlog is critical for long-term trust and success. Investors should read filings, monitor share count, debt levels, and supply chain updates alongside order and margin trends. In synthesizing the data, we arrive at two narratives: a compelling bull case and a cautious bear case. Bull case: global grid modernization and renewables, grid tech and wind tech positioned for a multi-decade cycle. Recent financials: strong revenue growth, movement towards sustained profitability, early scale. Backlog growth, government spending, and technology wins could accelerate momentum. Bear case: powerful competitors, supply chain vulnerabilities, execution risk, volatility, and overhead resistance on charts. Use defined entry and exit zones based on technicals and fundamentals. Watch list: wait for a pullback to a pre-identified support. Support could be a long-term moving average or a horizontal historical level. Entry criteria: support test plus confirming news, a major contract win, or another quarter of strong earnings. Start small and set a clear stop loss below support. Aim for favorable risk-reward. AMSC is a specialized technology company at the intersection of a major secular trend and tough competition. Monitor revenue growth, gross margins, backlog, debt levels, and behavior around key historical price zones. This is not financial advice, purely educational. Like, subscribe, and comment on what stock to analyze next.